Of course, this is a very high risk asset class, and every VC is looking for outliers. Outliers being those companies who can make those huge returns, the unicorns or the home runs. And we're right in the middle of the financial crisis. It was the toughest period to find any sort of opportunities in the market. I would like to say that's the first time I truly appreciate how Imperial brand could open up doors, because it's really through the network, the Imperial network, that I managed to land this opportunity. Our model at the time at Boost Fund was different. We were taking a passive approach, one that enabled us to make a lot more investments and diversify our pool, because we were able to make those decisions using the rating system we did. You raised a very good question. I think it was pretty clear to me within our cohort there was a lot of interest in the VC world, and it's not at all the easiest industry to break into.
Hello, today we are joined by Shahryar Barati, and he has had a very long career in risk management, VC, and investing, and he began right at Imperial. But before I talk about it too much, why don't you introduce yourself and how you got here?
All right, thank you. Well, you introduced me, Shahryar Barati. I'm not once, not twice, but a triple Imperial alumnus. Interesting, I keep coming back to this place. Not a bad place to be associated with anyways. So I started my Imperial journey doing a degree in biomedical engineering, followed by a master's in metals and energy finance before starting my career at JP Morgan within the risk management space. Then I came back again a few years back to do my MBA, part-time MBA at Imperial, and then transitioned into the world of startups and venture capital, having been a co-founder of an early stage startup where we developed and created a new investability rating system, a data-driven methodology to evaluate how investable startups are, and then we managed a fund powered by that tool as well, and that's how I got into the VC world. And right now I'm building an alumni fund focusing on backing pre-seed and seed stage companies within the applied AI space, within the Imperial ecosystem. So really looking to leverage my Imperial connections and support and back founders within the AI space in this kind of ecosystem. So yeah, that's the quick overview. I'm sure we can go into some more details afterwards.
Thank you for joining, and I'm sure Imperial's happy to have you back.
Great, my pleasure.
Yes. So I wanted to begin by asking, so you began your career at JP Morgan in risk assessment, this is correct?
Yeah, risk management. Yeah.
Risk management. And that's a very structured environment,
Yep.
especially in banking. But then later on you went to go work in startups. So what skill sets did you pick up within JP Morgan that you were able to bring into investing and looking at early stage companies?
Sure. Maybe worth mentioning how I got into JP Morgan to begin with, because that's an interesting story, and I'll cover that as well. So I wasn't actually looking for a risk management role. It just so happened that when I finished my master's degree, we were right in the middle of the financial crisis. It was the toughest period to find any sort of opportunities in the market, let alone the banking world. But thankfully, I would like to say that's the first time I truly appreciate how Imperial brand could open up doors, because it's really through the network, the Imperial network, that I managed to land this opportunity at JP Morgan within the risk management space, an area that I wasn't actually initially looking into getting myself into, but well, given the circumstances, I just ended up starting a role in that space, and I don't regret that, because it's a very fascinating world. Obviously, it's very structured, very quantitative, and the area that I was working with was the structured funds business unit. It was the passive asset management arm within the investment bank. I'm not going to go into details of that, but it was within an entrepreneurial business unit, a new business unit that was created at JP Morgan in the London office, and I was part of the first crew, the first members of that team. Which also meant, of course, my title was risk management, but we were sitting very closely with the portfolio managers, with the structurers, with the middle office guys, and the whole team was sitting in a small room, and I was very much exposed to pretty much every aspect of that business unit. So that gave me a pretty good oversight and overview of the whole asset management business. But risk management, going back to your question, obviously is like I said, it requires a lot of discipline. It's very quantitative, and it's a very important part of every business unit within the banking. of course, there's a huge, a lot of compliance and regulatory kind of provisions that being introduced and have been introduced to the business within the banking world, and risk management at the time, at least that I was doing that, was becoming very important, a key part of that every business unit. Yeah, that required a different skill set naturally. It was a big corporate, so you are doing a tiny part within a major corporation, and you need to start understanding or appreciating what value you're bringing vis-a-vis the grand scale, the bigger picture. Something that's not always easy, especially for people who start their career in the finance world, especially in multi kind of national or big organizations. You tend to do a very specific role within a huge organization that covers so many different areas. And unless you start understanding what you do, how your job translates to the kind of the bigger picture, it's going to be a struggle to do your job efficiently. It's one thing to go through the mundane processes that sometimes it's part of this kind of jobs, but if you want to excel, if you want to really improve, you really need to appreciate, to understand that. It was no different for me. How I ended up in the startup world or the VC world, the private markets, is also an interesting story. Around the year 2016, I think 2015, 2016, I think that was the time when we were seeing an emergence of new fintechs hitting headlines in the whole market, new challenger banks, payment apps, robo-advisors, etc. So it was a very exciting time for new fintech startups coming into play. Coming from and being part of the financial services world, that naturally excited me, and I was very interested in that field. So that was the beginnings of me thinking about the startup world coming out of the corporate world. But I didn't honestly think I had the skills, or maybe I didn't have the confidence when I think about it, to make that transition. I was very much used to a very safe environment in a big corporation. As I said, doing a very much a structured job, something that the boundaries are very clear, as opposed to a startup world where things are more agile, more free-flowing. You just need to adjust, and you need to learn new skills every day if you want to keep up to speed with the developments.
Yeah.
So that's when I started thinking about coming back to Imperial, or I wasn't thinking about coming back to Imperial particularly, but doing an MBA in order to reinvent myself. It just so happened that Imperial at the time, when I was looking at different opportunities, was providing pretty much the best program out of all the other options for people like me who want to enter into the entrepreneurship world from the corporate world, which is not the most common route for MBAs. It's usually the other way around. So yeah, came to Imperial, and again, thanks to the networking opportunities at Imperial, once again, I managed to get myself into yet another very exciting opportunity. I got involved with an early stage startup, and initially to do my capstone consulting project. Yeah. It wasn't meant to be any kind of full-time opportunity, but I really liked what they were doing. They also liked what I was doing, so I joined them on a full-time basis. One thing led to another, and I effectively became a co-founder of that business very quickly after that. And obviously the rest is history, but yeah, that was the beginnings of my journey within the startup world. And I don't know if you want me to talk through the experience, or you can keep that for other questions. But again, this is just thought it might be an interesting angle to see how I ended up transitioning into this role.
Actually, that was one of my questions, as you said, to go from something so structured to startups, and specifically VC, which is very competitive to get into, is not a traditional path.
Not at all. Yeah.
So I also think that's good for our listeners to hear, because I know there are people who want to go into VC and didn't immediately get into an offer or whatever, but it always gives more perspective about the different ways to do it, and always a shout out for Imperial MBA capstone. Yeah.
So you raised a very good question. I think it was pretty clear to me within our cohort there was a lot of interest in the VC world, and it's not at all the easiest industry to break into by any means. it's a network that's pretty much based on, it's an industry that's based on network, and it's a very close network, and the VCs don't necessarily hire people very openly in the market. So you need to kind of get lucky sometimes if you want to get into that world. And I was no different. I was very interested in that field, and this opportunity, when it came about, I think when I looked back, I actually had to take a big risk, because by the time I got into that, took that opportunity, I had quit my job within the banking world. And I was one of the few people in my cohort actually who did that, took that risk. Obviously, when you have the safety net of having a stable job, etc., is one thing. But I told myself, if I want to make this transition, I need to take some risk, and it thankfully paid off. So that capstone project initially paved the way for me joining that startup. And what we were building at that startup was effectively a rating tool to evaluate the investability of early stage startups using a data-driven methodology. So we were basically building tools for the VC market. So we were working with VCs, accelerators, and startups in the market as well. And we had plans to create a fund, a concept of an automated fund on the back of that rating tool, which was I thought it was a fascinating idea at the time. I still think that's the case. So that I saw that as a great opportunity for me to get myself into the VC through a non-conventional route, not necessarily the most conventional. I didn't apply to a VC or get a role or job opportunity in those companies, but we're looking to leverage the product that we had designed, the technology that we had developed, to create a new VC firm, a VC fund on the back of it. So of course, I'm finding myself in a complete new environment now. A very early stage company. There are only 3 or 4 people in the business. Very different to the corporate world. And all of a sudden, you need to adapt to a new environment. There's so much uncertainty. There are no 2 days that are similar to one another. You just need to be prepared to take on new challenges every day, and be agile enough and be flexible enough to accommodate or to pivot. And it was no different. We, like many other startups, we did have our fair share of challenges, especially initially going for a period without any funding. So we had to bootstrap, we had to create and prove our product in the market before attracting investments, and building an MVP, trialing it, testing it, back testing it, tweaking it until we get it to a stage that it can be commercialized. So yeah, that was the biggest challenge, the biggest learning point for me. Sometimes when you come out of the big corporates, especially if you have done an MBA, some people tend to boost some people's ego. I was no different. I mean, initially I thought I knew everything. I'm an MBA from Imperial, coming from JP Morgan. That's, of course, and this is something that makes me so unique. But no, this was a very humbling experience when I started my work at the startup, because like I said, you're faced with so many unknowns, so many challenges that it's just out of your control. You just cannot address them if you're not humble enough to embrace those challenges and opportunities, learn, and be able to acquire new skills every day. So long story short, we finally launched our product. It was a big success, and to the point that we also managed to raise a fund. That was kind of my main project I was overseeing at the time.
So what the economics of a VC fund is, and then at Capital Pilot, how you were able to take something that was organized originally very different, like a startup, and then be able to turn that into a VC fund.
Yeah, good question. So VC funds, or generally speaking, all venture capital and private equity funds live off of fees. So that's the main kind of revenue model for them is management fees plus carried interest or carried. Management fees, basically they are charged annually to the investors, typically 2%. That's the cost, that's the fee that covers the expenses, the ongoing expenses of the firm, the people, etc. And the carry, or the performance fees in some other asset classes, they call it that, is effectively the prize money for making successful investments and gaining kind of proceeds from the successful exits of those investments, whether through acquisitions or IPOs, etc. And that's where most VCs make their money at those making those successful investments. So that's kind of the basic economics of a VC fund. And what we were building at Capital Pilot, obviously as a startup, we had different revenue models. We were looking to commercialize that product. We were selling it on a subscription basis to certain VCs and accelerators initially, and offering assessments of startups to startups directly. So we're kind of monetizing that aspect as well.
So you were the rating agency for these startups, and your clients were VC funds who wanted. So I guess this, again, you were leveraging the skill set that you had picked up at JP Morgan in working in risk management to package that together. And so how long had you guys had this product or company for?
So that company went on for about 5 years. It took us a good 2-3 years to get the product to a stage where we could commercialize it properly and also build enough track record on the back of that rating tool to be able to raise a fund. Yes, we were offering services or rating as a service to venture capitals and accelerators who were looking to use those data-driven ratings in order to help with their investment decisions, or kind of monitoring the progress of the companies. In the case of accelerators, how they could monitor the progress of the companies throughout the programs. We were also offering that directly to startups who wanted to see how investment ready they are effectively, whether or not using concrete data, quantified data across various different criteria, typical criteria that the investors look for, and it simply gave them a holistic view of how investable they are, areas they need to improve, area of strength, etc. And that was quite a big success with startups as well. So that was on the company side, and we realized that what we're generating as an is a strong investment signal, because having done extensive backtesting, we realized that there is a very strong correlation between the ratings we're generating and the fundraising success of the companies we were rating. And that paved the way for us launching our fund, which was a completely different fund model, an automated fund, a passive fund, very different to the conventional VCs, which is pretty much based on making targeted investments and getting involved actively with portfolio companies, helping them grow and achieve their milestones. Whereas in our case, it was a different kind of approach. We were making a large number of small investments into a diversified pool of companies, purely based on the ratings they achieved. As long as they achieved a rating above a certain threshold, they would qualify automatically to receive funding by Boost Fund, which was the name of the fund. And that enabled us to make a lot more investment than a conventional VC does, because effectively we were able to streamline and automate most of the due diligence process, selection and due diligence process for the startups. And to the point that we actually led investments into 50 early stage companies in the UK within a space of 6 months. And we were one of the most active investors back in 2022, I believe, in the UK. And the first of its kind of automated investment fund, although there was of course human oversight into it as well, but decisions primarily were based on the ratings that we're generating.
Was part of the idea behind it to, I guess, play around in the power law returns?
Definitely. So that was an area of interest for me personally. I actually did research on that many years ago, published a blog on that as well, and how VCs can benefit from diversification based on the power law. Of course, this is a very high risk asset class, and every VC is looking for outliers being those companies who can to make those huge returns, the unicorns or the home runs, as they call it in the VC world. So one way, the standard way, is to make targeted investments, and like I said, in the conventional venture capital, you get involved with the companies, you tend to add kind of visible support to the companies. Our model at the time at Boost Fund was different. We were taking a passive approach, one that enabled us to make a lot more investments and diversify our pool, because we were able to make those decisions using the rating system. We didn't have to go through all the lengthy due diligence processes, the human interaction that's typically required in a VC fund. And as such, we were able to make many more investments in a shorter space of time. And the parallel, I mean, based on the parallel, obviously there are most of the companies, and it's a common knowledge in VC industry that most of the companies that receive investment at early stage, we're talking about seed stage, pre-seed stage, may not return anything, may go out of business, or at best may just stay where they are.
Which, to be clear, a lot of those companies, it works well for the founders, but from the VC perspective, where you have to deliver outside returns, those are considered a bit of a dud, or at least a non-returning.
Exactly. And ultimately, it's important to remember that VCs are accountable to their own investors, limited partners. And sometimes founders or people forget about that fact, that you see some VCs acting very aggressively, etc. I'm not necessarily advocating for that at all, supporting that. But it's also important to understand where that comes from, because ultimately VCs, as a business model, they need to make returns for their investors, and also that's based on the carry portion, which is the part of the returns that they can gain benefit from. That's their business model. In order to survive, they need to make those returns, and therefore it's only natural to think that some VCs will aggressively push some of their portfolio companies to achieve certain milestones. And that's why VC money may not be for everyone. That's also another consideration from the founder's perspective. I mean, unless you're willing to give away that chunk of business and be willing to align yourself with those sort of returns and timelines, great, that's a great partnership. If not, maybe it's not a good fit for you, because it's also worth remembering that it's a long-term game, and it's typically a 10-year life cycle for a fund. So that's kind of
And one of the other things I just wanted to touch on that I thought was very unique when I was looking at the Boost Fund is that because you were doing, I guess, automated investments just based on rule-based criteria, some of the perhaps traditional bias or the way that it shakes out is that very few amount of VC funding goes to women. But I noticed that was not the pattern that played out in Boost.
So one of the the principles that we created the Boost Fund, or that rating system for that matter, was to provide a fair and more objective decisions when it comes to investments. Naturally, VCs are biased. Investments in the VC space is very much biased, and a lot of it based on kind of some gut feeling, some kind of pattern recognition, etc. Although we're seeing an increasing number of VCs adopting more data-driven methodologies to address that. But that was kind of the primary principle we were working towards, to create a structure, a framework through that standardized and systematic rating tool to offer investments to the founders that deserve it most, not necessarily to the founders that we kind of personally view as kind of superior to the others. And as a natural consequence of that, we invested into a large number of female founded startups, companies coming from different regions in the UK, not necessarily focused in London, which is typically where it attracts most of the investments. And it was by design, the way that rating system was operating was evaluating concrete data points about each company.
Could you give an example of some of these concrete data points?
Sure. So think of it as a questionnaire, in the simplest term, that pretty much covers everything from the market opportunity, the market sizing, the go-to-market strategy, the team behind the company, the collective experiences, expertise of each team member, the scalability of the business, the financial projections, competition, the edge, etc. The usual suspect, the usual criteria that investors look for. But
traditional due diligence.
Exactly. Okay. But what we had built, kind of the principle behind it was that we were breaking those big questions down into multiple mini questions where they could be objectively answered. I mean, initially there were humans who were going through that process in order to feed the model with the answers, and then over time we were automating parts of it because we were able to collect data from different data sources and answer those kind of mini questions more objectively to the extent possible. Of course, there's some sort of judgment involved. We could not get rid of it in its entirety, but to the extent possible, we were trying to standardize the whole process so we could come up with more objective outcomes, if you like.
Yeah.
And the principles was very simple. How we executed, obviously, there was kind of more complicated, different layers of the weightings and ratings we were attaching to different criteria, and how we aggregated those to create an overall rating as well as scores across different criteria. That was a different kind of angle, but yeah, there was a very simple principle, and it was all about standardizing more than anything the typical criteria that investors look for.
Okay. That is very interesting, and I'm curious to see how it gets developed more across the industry. But I see in 2023, you left Capital Pilot and then decided to launch your own fund, Project VC.
Yeah.
Can you tell us a little bit about
Sure,
that?
sure. So Project VC or Project Ventures, it was initially set up as an advisory firm to offer advice around fundraising to startups, and also to work with VCs to source deal flow to the VCs. But very quickly, I realized there is a huge untapped opportunity within the Imperial ecosystem to create a concept of an alumni fund, something that's very common in the States, in the Northern American universities, by the way, not so common in Europe or in the UK. So the concept is very simple. So we're currently building a new fund, which is focused on backing Imperial founders or founders linked to Imperial, could be spin-outs out of the college or alumni founded startups anywhere in the world, with the thesis being around applied AI, meaning we're interested in specialized and vertical or industry-specific applications for AI, particularly in some verticals such as healthcare, financial services, and the future of work, amongst other verticals that we could back. So as an alumni fund or as an alumni-led fund, obviously we're primarily looking at backing founders within the Imperial community. Which is a huge talent pipeline, the huge innovation, kind of technologies and IPs being created within the ecosystem and also outside the college ecosystem by the former alumni of Imperial. But also more interesting, we're looking to tap into the collective expertise of the alumni network, whether they're mentors, experts, advisors, industry leaders, or connections. And that's where that's a gold mine that we have access through this world-class community. And that's another angle we're looking to leverage to do this. And interestingly, this is kind of landing pretty well with the whole alumni community at Imperial. I'm engaging with a lot of alumni day in, day out, and there's a lot of support. A lot of the investor people who've backed the fund have come from Imperial background, understandably so, but also we're looking to build a large and growing community of experts and advisors, primarily consisted of people within the alumni community. And once the fund is launched, and we're in the pre-launch phase, by the way, right now, we're planning to hopefully go live soon before summer, and so we can start backing talented founders and startups within the AI world. But yeah, it's an opportunity to work more closely with the Imperial network, and for me, it's a kind of a passion of mine as well. Having spent a lot of time, or most of my youth at Imperial, having done 3 degrees at Imperial, is obviously something that's very close to my heart, but something that I truly believe in as well. There's huge potential, especially around the technologies within the AI space that are being created, and the network we have access to. I think that the opportunity is immense, and I'm super excited to be working with the community to build. I would like to think of it as the first of its kind of alumni fund, at least in Imperial.
So I've spoken to many students who said that, as VCs, their dream. So can you walk me through, what does it mean to launch a fund? What are the steps? Sure. What are the backgrounds? How do you go about it?
Sure. So from the outside, it might appear to be a very kind of fancy and sexy industry kind of job. It's a kind of a very hard work to raise a fund and to create a VC fund, especially a first-time fund. First and foremost, you need to have track record. A lot of in order to gain the trust of LPs or limited partners or investors into the fund, you need to showcase a relevant track record in terms of kind of investing in previous startups or having access to certain deal flow or startups that would interest the investors, etc. So, and fundraising is never easy. I've done that previously at the previous startup, both contributing towards the fundraising efforts of the company as well as the fund, and I can attest to the fact that it's not at all an easy job by any means. You need to have a thesis, first of all, before after you've kind of showcased that sort of track record or that edge when it comes to having access to certain deals or startups or something unique about your network, your personality, your background, etc. You need to come up with a valid thesis.
Okay.
And thesis is effectively a simple way of expressing what sort of opportunities you're interested in and you're looking to invest. Timing of it naturally is very important. Obviously, the thesis needs to capture the trends or the opportunities that are available at any given point in time, etc. So you need to have a very concise and clear thesis that resonates with investors and also enables you to find opportunities aligning with that thesis.
So just going back to Project VC,
Yeah.
Was it you who approached Imperial, or did Imperial approach you?
Actually, it's good to mention that this is an independent fund. So we're
Okay.
not this. There is no formal affiliations or partnership with Imperial. We're setting this up entirely as an independent fund, but obviously in close collaboration with the Imperial alumni community.
Okay.
As an alumni-led fund, there are a growing number of alumni who are supporting in part of this
Okay.
initiative, and we're primarily looking to invest into founders within the Imperial. But there is no, of course, Imperial has been very supportive and helpful, giving us platforms,
Yeah.
etc. But there is
It's not a formal. It's not Imperial's fund.
no, it's not. It's not an Imperial's fund. No, Imperial also works on. There are different other projects and initiatives they're working on. This is an entirely alumni-led initiative.
Okay.
I'd like to clarify that. But nevertheless, we're basically looking to back the community at Imperial and using our access and network within primarily the alumni community. We're looking to leverage the expertise and also to support the founders.
Okay. So once you had the investment thesis, what was your next step?
So investment thesis, it takes a while to get it kind of tweaked and get it to a shape where it kind of does what it needs to do. So it usually takes weeks and months to pitch that thesis to initially your immediate network,
Yeah.
to get some feedback. And once you're comfortable and confident about it, then you tend to go beyond your network. So for a first-time fund particularly, a lot of the commitments or investments tend to come from people who know you, who trust in you, because you are the driver behind this. At this stage, we're talking about an idea. We haven't even made any investment, so
Yeah.
the world doesn't know what caliber of companies we're backing, but they know you as the managing partner or the person who's leading this. So typically the first investments or commitments tend to come from your closer circle, first degree connections. Once you start building some momentum, you tend to go beyond that. It requires a lot of networking. You need this numbers game somehow. You need to pitch to many investors. You need to speak and approach many investors until you find the ones who relate themselves to the thesis, and then you gradually get beyond your own immediate network and get connected to different individuals. And it's a lengthy process, and it's obviously, as I mentioned, requires a lot of resilience, because you need to persevere in what you're doing. If you truly believe in the thesis and what you're investing into, then that hopefully will be quite helpful, because that naturally shows through the conversations. So you build networks, you kind of initially getting the first commitments, and then you get connected to others. There's a lot of events you need to attend to raise awareness. There is huge amount of outreach that I typically do on LinkedIn or by email.
Podcasts you need to be
Podcasts, exactly. One of the benefits of this particular fund, given the Imperial Alumni angle, is that it's enabled me to connect with a large number of Imperial alumni, frankly, globally. And those people have been super, because there is an element of, there is an inherent connection between kind of fellow alumni of the same university. Even if it's a cold outreach, there is usually, it feels warmer than a typical cold outreach. And I've had a lot of support, a lot of positive conversations from the Imperial alumni, who are all very proud of their affiliation with the institution. And they're very enthusiastic about the college, and they look at it as an opportunity to engage and add value to the ecosystem, whether by investing into the fund or offering their expertise as an expert or an advisor within this initiative. So that has been super helpful, and I think that's an advantage that this kind of the concept of alumni funds may have over the other funds, and this is an opportunity that I'm definitely looking to benefit from, and benefit from the collective wisdom of the alumni network that we have access to. So that obviously plays a central part into our fundraising.
Somewhat, I guess, perhaps controversial question, but why have you decided? It seems like you're going back to more of a traditional VC model.
Yeah.
Why was part of the reason that you didn't choose to continue your automated VC work in this fund?
Very good question. So this is going to be a hybrid model. Okay. So we're still using learnings, not the exact same process, but obviously learnings from that methodology that we've developed to in order to screen incoming opportunities at the top of our funnel. So we're still definitely leveraging data-driven methodologies. And we're also working with partners who offer data-driven or machine learning-based scouting for the fund as well. So we're certainly using a data-driven approach. However, what I realized, especially within the context of Imperial, given that there is a lot of expertise and connections and industry leaders within the community, it's also almost it's natural to think that there's a huge amount of value we could potentially add to the companies that we back. So that's why also there's another consideration, is that we're a specialist fund, not a generalist fund. The previous fund was generalist, so the only criteria was to achieve a rating above a certain threshold. But here there is a theme, there's a technical theme, AI. So obviously we need some technical experts to look into those technologies as well. Of course, there are aspects of the due diligence that can be done automatically, but we would love to leverage the technical expertise that we have access through the alumni network, as well as the domain and commercial expertise and that we have access to, as well as the connections that we can facilitate for these companies with their go-to-market strategy, or eventually helping them connect with the corporations that may eventually acquire them. And looking at the Imperial Alumni Network, more than 250,000 alumni globally, a lot of them are prominent, influential industry leaders, etc. So they could open a lot of doors. And that's an angle that we're looking to leverage. And therefore, we decided upon a kind of a hybrid, but a more targeted investment approach, where we can not only back Imperial founders with an investment, but also add value through the network that we're building, the mentorship and the advice that we can offer, and as well as the connections that we can offer to those companies. And that's certainly one of the key parts of the value proposition, which made us focus more on a targeted traditional approach, as opposed to a fully automated, data-driven.
That makes a lot of sense. And then I guess the last thing that I wanted to say was, for students, we begin a lot of our careers reaching out to people on LinkedIn, fellow Imperial alumni, hoping that they'll get back to us. So I guess it's good to know that no matter how high you climb, you inevitably get back on LinkedIn to reach out to people. Absolutely. That has been my number one, the best performing strategy so far, especially using LinkedIn. And it's been super kind of encouraging and heartwarming to see such responses from fellow alumni. And it almost feels like if you have the right
opportunity, the right proposition.
Can you give any insight to maybe perhaps how students can get their hit rates up when they reach out to alumni?
Well, I mean, it depends what they're looking for. I mean, if they're simply looking for a job and they're hoping to land a job by simply, yeah, they may or may not work, but it's about building that relationship. So, and for me, it's different because I'm kind of reaching out. It's almost like an invitation for collaboration from the alumni network who have something to offer for this, whether it's investments or advice, expertise, or being involved in running an alumni-led initiative that benefits the community. So that's something that resonates very well with a lot of the alumni. Of course, if you're looking, you have other objectives. If you're looking to land a job, for example, you need to approach it probably differently. But all I can assure, and that's my experience, I can assure you that there are more alumni that you can imagine who are willing to have an initial chat with you, or who are actually at least willing to answer you, respond to your request and connect with you and listen to what you have to say, or what you're looking for. Even if they don't, they're not able to help you directly, there are probably other connections they can make. So that connection between the alumni is something that students shouldn't discount. It's almost, I always recommend people to approach the alumni network as a first point of contact, because that's more like a family type environment. You're more connected. It feels less cold, more warm, as opposed to cold calling or reaching out to people outside of your network. And it's for me personally, it's been a very helpful approach. And even prior to this, I've done this before. I mean, prior to building Project Ventures, I've been reaching out to a lot of alumni for different reasons, different capacities, and usually more often than not, I've been able to get hold of and have some interesting conversation, to say the least, even if we didn't necessarily get what we're looking for.
So how can are you looking for students to hire students to get involved? Or if not, how can students reach out to you and learn more?
Absolutely. So one of the key pillars of this project is to ultimately provide an opportunity to students at Imperial to either land opportunities within a venture capital that sits within their ecosystem, or also get connected with the companies, the portfolio companies and startups that we back.
Who are looking to hire.
Exactly. So obviously we're early days. It's a small fund that we're raising, so limited opportunities to hire people on a full-time basis, but always open for students who want to learn more about VC and different aspects of it to connect with me, to we can always, there are so many different initiatives we're working on, and there's always, we can always find an interesting opportunity or project to help students gain some relevant experience. And obviously once we go further, we progress with the fund, we grow, then obviously naturally that there will be opportunities for us to hire students on a full-time basis as well. And in fact, we're also open to, we've submitted some proposals for capstone consulting projects, having been the beneficiary of that myself, and having offered that to many student groups at Capital Party, our previous company, and seeing the benefits of it. I'm definitely keen on offering that to business school students at Imperial, but also technical students from the other part of the college, if they're wishing.
What's the best way to get in contact with you?
LinkedIn, always the easiest. Email, I don't know how we can share.
I'll put it in the show notes.
In the notes, I can share that email, but LinkedIn usually is the easiest way to connect with me. And I'm spending a lot of time on campus, speaking with various people, so kind of always accessible by students if you want to meet for a coffee or something. So yeah, always keen to engage with students who want to get into this industry, always keen to engage with fellow alumni or other students who might be interested in offering support to the fund in different capacities, whether it's from an investment perspective or from an advice and expertise perspective. So very open to engage with.
When you say advising expertise, I think we talked about this just briefly before the show, but I want to say there's a classmate of mine who has a background in chemistry, and I believe he's working with your fund right now from a technical perspective. So that's another.
Definitely. So we are one of the kind of value adds we're offering to the companies is offering expertise, mentorship, and advice in various different forms. It could be technical expertise from an AI, machine learning kind of experts that we have, or could be domain expertise within the industries that we're targeting, be it healthcare, financial services, or other verticals we're targeting, be it individuals who have experience in marketing, PR, business development, leadership, talent, you name it. There's so many different individuals bringing different flavors and different expertise to the table that we have access to, and these are ultimately the people that we can connect with, the portfolio companies, and help them achieve their targets and help open up some opportunities, offer advice, mentorship, and beyond that. So yeah, we're very open to work with anyone coming from any background that has some relevance with our strategy.
Okay, thank you so much.
My pleasure. Thank you.
Credit to our producers, Alia Friedman, Louis Kim. Head of Marketing, Samhat Raman, Juniors, Ken Zhang, Angie Zhao. Head of Scriptwriting, Alfred Choi, Juniors, Aditya Muthakumar, Kwan Lin. Head Liaison, Lucrezia Poloni, Junior, Ekaterina Vitor. Head of Audio, Isaac Chu, Junior, Cyrus Lee. Head of Sponsorship, Sami Liu and Vladimir Dmitriev. Juniors, Leo Lee, Jamila Tabet, Utkarsh Jetli. As a reminder, the purpose of this podcast is educational content. Our stock pitch is meant to showcase student research and how to perform a pitch, not to be taken as investment advice.